the S&P 500 as we get ready to trade November week 4, 2022, heading into the Thanksgiving holiday with markets closed on Thursday. And chances are it might be a holiday shortened trading day on Friday. Maybe, maybe not. I might be wrong about that. I might be right about that. But go ahead and check the schedule. And if it is, just be on your toes about that, knowing that the market is only going to trade through 1 o'clock Eastern. Okay, anyway, let's take a look at the S&P 500 starting with our intraday chart, basically focusing on what happened from Wednesday's close to Friday's close, kind of ending up in the same spot. We ended the day strong on Wednesday, only to gap down open on Thursday. And into that gap down open, we tested the 10 and the 100-day simple moving averages, held above the 3,900 handle, reversed and rallied back on the day, but did not quite fill that gap to Wednesday's close. So that rolled over, got a second set of buyers to come in to push us up into the close on Thursday. And then it took until Friday's gap up open to fill this gap to Wednesday's close. Friday's open was for monthly OPEX, and we had a settlement print, November set, print at 39.83, but as you can see, the actual open on the S&P was only 39.66. So, and then the entire day, we never made it back above 39.83. So this is going to be, your line in the sand to the upside. We need to see a move over 39.83, print and hold. Then we know we're above November settlement. That's probably going to get us the fuel we need to get over the November week 2 close at the 39.92s. So 39.83, 39.92, and then boom, we'll be to 4,000 and on to the 200-day simple moving average after that. If we're going to have some options hangover on Monday instead, then we're going to be back down here testing Friday's low. Friday's low was around 39.35, maybe more like 39.36. We need to see a test and hold above 39.36. And if that breaks down, then we're going to test the 10 and 100-day simple moving averages again, and this low from last week down here at 39.0654. Okay, so let's look at our simplified daily chart. What a big driver of the rally that we've seen over the course of the last 2 weeks is the fact that we had this huge gap up open on November 10th. A 100-point wide gap up open followed by another 150-point move on the day. So a huge, huge, huge move that took us for a close outside the bear fork. And since that close on the 10th, we have sustained a trading range, and not just a close, but the whole day's trading range each day since has stayed outside of the bear fork. And this is also lining up with that 100-day and that 10-day simple moving average and the 3,900 handle. So as long as all that complex holds, we are just building support for a powerhouse rally that's going to take us through the 200-day and up and over the 2022 halfway back at 41.55. If it takes a couple of more days to make it to the 200-day simple moving average, it's going to be around 40.50, 40.55. So then another 100-point rally on the tail of that if we can make it through the 200-day. Looking back here to our summer rally, that is directly where the summer rally failed. It kissed the 200-day simple moving average and then just rolled over and sold off. That's going to happen again. We're going to fail right here at the 200-day, and then we'll be selling off and probably be creating a brand new bear fork, with that being a point on it and seeing where a median line would fall from there. But we'll cross that bridge if and when we get there, and if that is what happens. Looking at the roadmap, we can sort of key it up a little closer here. You see what I'm talking about, how if it just takes a couple more days to get to the 200-day, it's going to be around the 40.50s. And we're either going to pass or fail there, and if we pass, we'll be 100 points on top of that in no time to 41.55. And if we make it over the 2022 halfway back, then we go back to this chart here, and we will be setting our sights over the course of the rest of the year with a target at 44.34 and rising to make it to the median line of our bull fork. Okay, let's talk about what's going to happen if this 3,900, if that whole complex breaks down. If that breaks down, all the stuff that I just showed you, if that happens this week or if it happens next week or whenever it happens, we're facing the 20-day simple moving average after that, And if the 20-day does not hold us up, then we're looking at the low, the open, and the gap support from November 10th. That open was 38.59.89. So if we can't hold 38.60 or so, we're going to be falling into this gap, and that's pretty much going to be the end of this rally. We're going to be coming down here to the 50-day. I don't really know whether or not that would hold us. And if we can't hold open this gap, if we fill this gap and close below it, closing below 37.48, we're going to be back here again, testing the November low set on the 3rd, down at 36.98. And then finally, as we've discussed in past videos, trying to test this area around 36.50 to 36.47, where this back test comes in after we set the new 2022 low back in October. And if all of this fails, then we are back here testing the October low. And if this is happening while we're in November, it could be an end of the month huge test, trying to look for a double bottom. And if we get that double bottom, maybe we could turn around and move back up again to to get our end of the year performance chase rally from out of that. However, if we're not going to even break down below the 3,900 handle, that's not going to happen this year, I don't think. And if it does, it's not going to happen until the end of December, once the performance chase and the end of the year rally and the holiday rally is out of the way and money's coming off the table, in which case it could be a long drawn out thing that takes us all the way into Q1 of 2023 before we get back here and test this. Okay, let's take a look at some indicators in the side view mirror that are very important. Oil this week broke down below $80 intraday, came back to settle at the $80 handle on Friday. We want to see oil stay in the 80s and maybe break down below $80 again. If you see that happening, the market is going to rally. Over on Apple closed the week out at the 150 mark. We want to see Apple continue to hold 150 with only intraday dips, but closes above 150. And if it can do that, if Apple can rally to 155, 156, you can look at that level on a daily chart. It's a very important area for Apple. That is going to really help pull the S&P 500 up and over the 200-day. If Apple can follow suit with that 155 to 156 level. Over on VIX futures, these fell down, and these fell down for a 20-day low, because this is a 20-day 15-minute chart I have up here that you're seeing. The low for the last 20 days was set on Monday of this week, down at 23.27. Tried to rally off of this, but kind of, support resistance rolling around here for 2-3 days straight at the 25 level and settling the week below 25. We want to see these stay below 25, break below 23, and maybe even get all the way down to 20. That's going to be a great thing to watch out for and know whether you should be short or long this market this coming week. Finally, let's take a look at the calls and the puts. Let's focus on Friday's expiration. There was a lot of volume here in the 4,000 calls. They are a little rich right now. So if we have a soft open on Monday, a little options hangover, and we do go down and test those lower 3,900s, testing that 10-day and 100-day simple moving average pair up, maybe these are going to fall to the $11 window for an entry. And if they fall below 11, wait for these to test 8 or just dip below 11 and recover it. But if you're going to be going all the way out to Friday, you should be expecting to pay that. If you want to play something less expensive, just make sure that you have that support at that 3,900 to 3,910 area on the S&P 500 before you buy something so far out of the money, because you're going to have to see a 100-point rally for those to go in the money, and that's really not our goal with calls. We want to be in calls that could definitely go into the money and well beyond. And if we are going to make it all the way to the 200-day simple moving average on Friday, paying $11 for these are going to go to about $60 by Friday if we make it over the 200-day simple moving average. Over on the put side, 3,900 calls had similar volume at just under 5,000, and they held the $11 window going into the close Friday. So if we do have a little bit of a soft open, these maybe would have been a good play to hold over the weekend, but don't sweat it. I mean, you don't have to play every single direction and of every single trade. You could just wait and watch this play out. We want to see that those lower 3900s hold on the S&P. We want to see volume ramp up in these, and therefore the market reversing, and then we know that there are put sellers protecting that 3900 level, just like they were last week at the end of last week. And if you see that setup, look over here at these 4,000 calls, see where they're at, and get long those for that rally to the 200-day, where these will go about $50 or $60 in the money by Friday. If we're looking for the 200-day simple moving average to be held and closed above on Friday. Speaking of Friday, I am not going to be posting on Friday. In fact, I'm only going to post Monday and Tuesday of this week, and I'm going to take Wednesday through the rest of the week off the market. So I hope all of you have a great Thanksgiving, and I hope you make a lot of money this week, because I have to tell you that I'm thinking about winding down this Twitter account as it is. I'm not really happy about the situation on Twitter right now, and my heart's really just not in supporting Elon Musk in any way, shape, or form. So we'll talk more about that at a later date, but I just wanted to kind of give you a heads up that I'm thinking about doing that, getting off Twitter altogether, or at least off of this private account. Okay, have a happy Thanksgiving, everybody, and as always, good luck and good trading.